Hey traders, in today's lesson I'm going to show you some stock trading tips on when to trade smaller positions, especially in volatile markets. This can really help us navigate these choppy markets and avoid some losers. So stay tuned. Hey traders, Cawiezell here with thetradersplan.com, here with a brand new video on when to trade smaller positions, when to really dial it back. And I want to welcome you to another lesson. Thanks for stopping by, and I'm super glad to have you. Now, if you're new to my channel or new to any of my lessons, I want to welcome you as well and encourage you to subscribe to my channel, as I have plenty of other lessons on managing market volatility and chart reading. So if you're interested in trading the markets, go ahead and hit that subscribe button as well as the notification bell so you can stay up to date with all my recent trading videos. Okay, we're looking at a market right here of the S&P 500. All right, this is the current market. We're in May of 2022, and the market's not pretty. It's chopping around all over the place, and what we want to do is have some hard, fast rules and very simple rules on how to really protect our capital. Right? Think of it as a casino, or if you're playing blackjack. We have all these little edges in trading to make us the house, right? When the odds are in our favor, we bet more. When the odds are not in our favor, we bet less to protect our chip stack. And that's exactly what we're going to do with our trading. Our chip stack is our capital, and we're going to make sure when the odds have decreased that we are not making big bets. Okay, so very, very simple rule that I follow, especially in my System 1, my weekly reversal system. But here is the simple rule. I like to use moving averages because they're just an easy tool that anyone can replicate. They're not fancy. You don't have to overanalyze anything, and they're very objective. So we're going to look at the 200-day. This is a daily chart, by the way, of the S&P 500. We're going to look at the 200-day simple moving average. And here is a very, very simple rule to follow and a guideline to follow. When the price action is under the 200-day simple moving average, we're going to cut our position sizes down to half. That means if we normally take, let's say, a $5,000 position, we're going to take a $2,500 position. It's really just that simple. Now, most of the people that are watching this video, we're probably pretty active traders, right? We want to be more active. We're not very passive, but we also understand that sometimes just the odds in our favor. So is this a perfect tool? No, that it's not perfect, and there is no perfect tool out there. Will this help us in the short and long term? Absolutely. So that means when the price action is under the red line, we're taking a half a position, right? So, right, the price action is under the red line, we take half position. The price action is under the red or above the red line, we can take a whole position. So, but look at all these choppy markets right here. All these choppy markets, if you were getting, chopped up and spit out, whether right here, or even right here as the market was pulling back and really, really starting to falter, then, if you lose, for example, 4 in a row, instead of losing, let's say 4%, if you're risking 1% of your capital, we're only losing 2%, right? Because you're risking 0.5% or you're risking a half a position size. So not only does it protect us in choppy markets and long bear markets, it protects us. The death by 1,000 cuts is really, really hard on our psychology. But it protects our mental psychology as well, because if we go on a losing streak and the market is just not working, then we're protecting our capital and we're protecting our psychology. So this right here is a pretty choppy market, and let's go look at another market. This is the 2007 to 2009, and we're definitely not in that right now, but I think it's just important to see how this could really help, if something longer term does happen. Once the market starts to roll over or get choppy, you can see right here the market started to move under the 200-day moving average, had a little whipsaw there, but it was under the 200-day moving average for almost a year and a half. Okay, and if you were trying to buy a bunch of dips or buy a bunch of bottoms, then you're protecting your capital the whole way, right? Because if it's under the long-term moving average, then we know the odds of our successful winning trades have decreased. Okay, so protect your capital, take a half position size. If it's under the line, you can take a whole position size if it's above the line. Now let me show you a simple tool. So that is a very, very simple rule on what to do and how to follow and how to navigate these markets. And I know they move fast, and I know sometimes we want to jump on board, but again, if I go back to this, right, what we're trying to do is we're trying to avoid, backing up the truck on every single 2, 3, 4 day rally before it rolls back over again. So this is what we're trying to avoid, because I think what happens is a lot of people, they see the big bars on Fed Day, or they see these big pops and they say, I got to get in, and they pile in. And then the market gets slammed because we're in a choppy market, and then they just get chopped up and spit out. Just take a half position size. So I just Googled, position sizing calculator, and this chartyourtrade.com position-size-calculator is a very, very simple tool, and I'll quickly show you how to use it. Let's just use some simple math, and assuming that you have a $100,000 portfolio, again, this is just simple math, percent of account you are willing to risk. I'm going to type in 0.5, right? Because instead of 1% or risking $1,000 of my account, I'm risking 0.5%. And the entry price of my stock is $50 and the stop loss is $45. That is just, for educational purposes. And then what's cool is I can click compute down here, and it shows me my position size, dollar amount, and it shows me how many shares I'm going to buy. So if I go up here and say, okay, and that's, 10%, of the, that's 5% of the portfolio, but that's the 10% stop loss. But let's say, okay, what if I want to go back to a whole position size of 1%? Well, you just type in 1 and you click compute, and it tells you to buy 200 shares. All right, 200 shares, and now your position size is 10% or $10,000. So you can easily adjust this on the fly. I think this is a great tool to calculate when you want to decrease how much you're putting in a stock. This is a great tool to use. All you have to know is your account balance, the stock you're going to buy, and the stop loss you're going to put, and then you can just cut that position size in half. Click compute, and it'll tell you exactly how many shares to buy. So I hope this was helpful. Feel free to leave a comment below, or if you have any questions, I answer these dailies, or if you're interested in other videos you want me to create, drop that comment in the comment section below. Now, if you're new to my channel, I want you to go ahead and hit that subscribe button as well as the notification bell so you can stay up to date with all my recent trading videos. In addition, you can check out my website at thetradersplan.com. There's some great training on there. You can click the button below. I'll see you on the next video.